Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, having initially rebounded early last week, the Australian dollar's bullish sentiment ran into certain difficulties, especially after posting a long-legged doji in front of the 60-day moving average. Around that 71, 70.90, the market retreated very hastily and therefore from the fall reaches its objective of 70.55 and now puts a slight mixed tone to the start of the week. Nevertheless, a small intraday bounce is coming through at the moment, and I do expect up towards 71.2030 as likely to fail. And from there, may see a rejection and turn back down towards that support level of 70.55 and eventually take it out. Therefore, I'll be looking for a further weaker play and looking down towards the region of 69.65.75, where we saw not so long ago, and therefore maybe reassess from that point and see how the technicals are shaping up. The European Central Bank surprised the market last Thursday after indicating that a change in its inflation outlook is also in progress, which has lifted the euro sharply after hinting that it could reverse its dovish stance and hike interest rates in 2022. President Christine Lagarde noted on that Thursday that uncertainty about the ECB's inflationary outlook has increased and that the risks are on the upside along with the intermediate path ahead, therefore leading many economists to reverse their forecast in favour of a rate rise. This is why the market surged very aggressively. So since the rebound of 111 and now looking towards the top side, which is somewhere around the resistance of 114.70.80, the market may actually take a tumble. I feel the dollar index, which measures the greenback strength against a basket of 6 major currencies, is staging a quiet rebound and therefore could see further strength into this week. We could easily see this MACD signal and the MACD itself buckle over and therefore could reinstate the downside if we get a break of 114.15 down to 113.65 or even as low as 113 the figure. Dollar yen, well, the market was a little bit sort of mixed last week after initially selling off for 4 days as rebound for 3 days and now questioning on how strong this market is. I feel that towards 115.45 or even beyond there to 115.90 figure, like as we were not so long ago back in late December, in early Jan, the fact is that we got a good rejection from that bull trend and therefore the market may actually do or stage another significant downturn from there back towards the support region, somewhere around 114.20 to 113.65. Looking at the sterling, well, the bullish performance displayed from the British pound was reversed on Friday after displaying a sharp retreat in front of the level of 136.50.60 after posting an intraday high of 136.27. On Thursday, the market surged after the Bank of England raised interest rates by 25 basis points to 0.5%. However, surprisingly, 4 Bank of England Monetary Policy Committee or MPC members voted for a 50 basis point rate increase. However, the initial reaction to the votes split pretty much the pound and has remained somewhat wobbly, even though the Bank of England Governor Andrew Bailey acknowledged that the economic outlook was worsening. So if we are presently seeing this pullback, as we can see the MACD and also the RSI has somewhat softened, then we could see a pullback in the short term to around 134.60.70. And then from there could see a rebound back to that top side of the range around 135.70 to 136.20. CAD-Yen still going as it has been for some time sideways. I'm still holding the view that we're heading down towards the region of 89.60.80 and reassess from this level. But after another week, gold is determined to push higher, and as it now looks towards 1,811, the market is still holding a little bit of momentum that could stretch towards 118 1,818 to 22 and reassess from there. I'm not bullish. I just think the market's trying to just squeeze out some of the shorts. As you can see from this knee-jerk reaction, and pretty much surprisingly, still rebounding off that level of 1,788. Let's see how the market plays at the start of this week. And wrapping up with oil, well, since the break above $90 a barrel has left me neutral. But I will say that if this squeeze is parabolic, then we could see a move up to $95 a barrel or even up to around 106. Due to the fact is that the trend is still there in the ADX and the MACD is still weak, but I feel the market is going to produce some kind of heavy candle like this Marubozu. So I'm just preparing myself. So I'd rather be neutral and just sit on the sidelines and wait for that opportunity. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new week.